In today's video, I'm going to show you a Heiken Ashi version of the traditional RSI indicator. This indicator can be used to identify market trends, market reversals, as well as overbought and oversold conditions. We're also going to show you how to use this indicator to trade, the best settings to use, and we'll also combine it with other technical tools to create a super profitable trading strategy. If you end up finding this video helpful, remember to leave a like. Let's get into it. Now, the indicator that we're talking about is called Heiken Ashi RSI. To add it to the chart, you're going to open the indicator search tab on TradingView and type in Heiken Ashi RSI. Be sure to select this one by J. Rogers. The Heiken Ashi RSI uses the principles of Heiken Ashi candles and integrates them with RSI calculations to form an oscillator. This oscillator is designed to smooth out the inherent noise often seen with standard RSI indicators, potentially providing clearer signals and insights into market trends. In this segment, we're going to delve into the various components that make up this indicator, which, despite its simplistic design, is incredibly powerful. Let's break it down step by step. First up, we have these distinctive candles known as the Heiken Ashi RSI candles, or RSI for short, as can be seen right here. Next, we have this yellow line gracefully traversing the indicator window. This is referred to as the RSI overlay. Adjacent to it, you'll find the RSI histogram, which might not be super visible at the moment, so let's enhance its visibility by increasing the opacity to 100%. This histogram is the RSI histogram. Moving on, let's focus on these critical threshold levels. The red horizontal line positioned at the top represents the overbought level, and it begins at the 20 mark on the indicator scale. Conversely, the green horizontal line at the bottom illustrates the oversold level, beginning from the -20 point on the same scale. Lastly, we find ourselves at the central axis point of this indicator, known as the median line, which separates overbought and oversold regions, serving as a point of equilibrium in this indicator's analysis. Now, looking at the settings of this indicator, we can change the length of the Heiken Ashi RSI candles. For this video, we're going to reduce it to 10. And as you can see here, reducing the length makes this indicator more sensitive to price. For a good balance, we're going to stick with 10. And then here, we can change the smoothing of the Heiken Ashi RSI candles to reduce market noise and false signals. Let's increase this to 3. Then right here, we can change the color of the Heiken Ashi RSI candles, but for this video, we're not going to change the color. These settings are for the RSI plots. We're not going to touch them because we're not going to be needing the RSI. In fact, let's disable the Show RSI plot option as well as the Show RSI histogram option. And as you can see, we're only going to be using the Heiken Ashi RSI candles for our strategy. There's also an option for us to show the stochastic oscillator, but for this video, we're not going to be using this option, so we're going to leave it unchecked. Then here, you can change the overbought and oversold levels, and then here you can change the values of the overbought and oversold levels, as well as the extreme overbought and extreme oversold levels. Moving to the Style tab, it permits the alteration of various indicator components, including the customization of the overbought, oversold, and median line values, alongside the opportunity to revamp the color scheme of numerous indicator elements. Despite these options, we're going to maintain the current settings, so click OK. Now, how can we use this indicator to trade? Well, just like the traditional RSI, this indicator can be used to identify overbought and oversold levels in the market and consequently to take trades based on these conditions. Another way of using this indicator to trade is divergences. A divergence occurs when an oscillator is doing the opposite of what the price action is doing. So for example here, the price was creating lower lows while the indicator was creating higher lows. This is a bullish divergence and is an indication for us to enter a long trade. And of course, it's going to be the opposite for a short trade. As you can see here, the price was creating higher highs. Meanwhile, the Heiken Ashi RSI candles were creating lower highs, giving us an opportunity to enter a short trade. Now, in order to craft our strategy around this indicator, we need to add 2 more tools to the chart. But before that, let's talk about hankotrade. Now, you may be thinking,
and what exactly is hankotrade?
hankotrade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest they can go. For those of you who love high leverage, hankotrade offers a maximum leverage of 1 to 500. If all of that isn't enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so now you'll have a total of $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. Now open the indicator search tab and type in UT-bot alerts. Select this one by Quant Nomad. Next, type in market bias. Select this one by Professor X. Double-click on the UT-bot alerts indicator to access the settings panel. On the inputs tab, change the key value to 2. Then on the style tab, disable these 2 bar color options and then click OK. Next, double-click on the market bias indicator to access the settings panel. On the inputs tab, change the period to 200 and the smoothing to 50. Then on the style tab, we're gonna uncheck the Heiken smooth option and then click OK. Now, you may be thinking,
but why did you add these 2 indicators?
Well, these 2 indicators are gonna act as additional confirmation tools for the Heiken Ashi RSI indicator because we can't use only this indicator to trade. We're gonna combine these 3 and enter trades based on pullbacks, and not just regular pullbacks, but pullbacks that cause the Heiken Ashi RSI candles to go into the overbought or oversold levels. The market bias is going to be used for trend identification. A green ribbon with the price trading above it indicates a bullish trend. A red ribbon with the price trading below it indicates a bearish trend. The UT-bot alerts indicator is going to be giving us the buy and sell entry signals. When it says buy, we buy. When it says sell, we sell. Simple, right? Now let's go over the conditions for entering trades with these 3 indicators combined. To enter a long trade, we need the market to be in a bullish trend to increase the probability of the price heading in the direction of our trade. To confirm that, we're going to pay attention to the market bias indicator. We need this trend ribbon of the market bias to be colored green to indicate a bullish trend. Next, within this bullish trend, we need the market to do a pullback. To confirm that, we're going to let the market play out until the trend ribbon of the market bias changes color from bright green to dark green. This indicates that the market is in a pullback. Third, during this pullback, we need the market to be oversold. To confirm that, we're going to pay attention to the Heiken Ashi RSI indicator. We need the Heiken Ashi RSI candles to break and close in the oversold level of the Heiken Ashi RSI indicator. An oversold market within a bullish trend increases the probability of the price continuing in the direction of that bullish trend. Next, we need a buy signal to be printed by the UT-bot alerts indicator. To confirm that, we're going to let the market play out. Now, for this buy signal to be valid, the Heiken Ashi RSI candles should be colored green at the time the signal is printed. A green Heiken Ashi RSI candle that happens after an oversold market indicates a shift in momentum from bearish to bullish. All our entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low. For the take profit, we're going to set it at 2.5 times the risk. We let this trade run and take profit. To enter a short trade, we need the market to be in a bearish trend to increase the probability of the price heading in the direction of our trade. To confirm that, we're going to pay attention to the market bias indicator. We need this trend ribbon of the market bias to be colored red to indicate a bearish trend. Next, within this bearish trend, we need the market to do a pullback. To confirm that, we're going to let the market play out until the trend ribbon of the market bias changes color from bright red to dark red. This indicates that the market is in a pullback. Third, during the pullback, we need the market to be overbought. To confirm that, we're going to pay attention to the Heiken Ashi RSI indicator. We need the Heiken Ashi RSI candles to break and close in the overbought level of the Heiken Ashi RSI indicator. An overbought market within a bearish trend increases the probability of the price continuing in the direction of that bearish trend. Next, we need a sell signal to be printed by the UT-bot alerts indicator. To confirm that, we're gonna let the market play out. Now, for this sell signal to be valid, the Heiken Ashi RSI candles should be colored red at the time the signal is printed. A red Heiken Ashi RSI candle that happens after an overbought market indicates a shift in momentum from bullish to bearish. All the mentioned conditions are met on this candle, so we're gonna enter a short trade. The stop loss is gonna be set above the most recent swing high. For the take profit, we're gonna set it at 2.5 times the risk. We let this trade run and take profit. The Heiken Ashi RSI oscillator is an innovative trading indicator that combines Heiken Ashi candles with the relative strength index in an oscillator format. This tool aims to smooth out the inherent noise usually seen in standard RSI indicators, providing accurate insights into market trends. By incorporating this indicator alongside other technical analysis tools and elements such as price action and market structure, you could potentially devise a highly profitable trading strategy. It's crucial to note, however, that the strategy showcased in this video isn't financial advice. It's solely intended for educational purposes, illustrating the functioning of the Heiken Ashi RSI indicator. Feel free to combine this indicator or the whole strategy with your own analysis to make it even better. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.